KVB PRIME, developed for global traders, growing together with you.
Okay, welcome to this week's market commentary. And today we have a topic: US protests continue to spread and a post-Brexit talks enter a very crucial phase. Now let's get into our topic. But before that, we have a disclaimer. Please read. The content contained does not construe any form of advice, and the user must not take this as such. We do not accept any liability for the direct or indirect usage of the content held in this article. We strongly advise that you obtain independent financial, legal, tax advice before proceeding with any currencies or spot mental trades. Okay, let's get back into our topics for this week. Now, last week, US economic activity slowed down significantly. The unemployment rate reached the highest level of 14.7% after World War II, and the total number of jobless claims has exceeded 40 million. The United States released a number of economic data on the 28th, showing that it analyzed the quarterly rate of GDP contracted by 5% in the first quarter, which was the largest quarterly decline since 2009, and also the first negative growth since the first quarter of 2014. Furthermore, according to a report by the Department of Commerce, US consumer spending fell by 13.6% in April, surpassing the 6.9% decline in March, the largest decline since 1959. Now, because people tend to hold cash to cope with the economic downturn, the personal saving rate soared to 33% from 12.7% in March. And in addition, the US core personal consumption expenditure prices index fell by 0.4% month to month in April, and the largest decline since September 2001. In terms of the production, the US manufacturing PMI in April was only 43.1, which was still shrinking. Although states have begun to allow companies to reopen, manufacturing recovery has been slow, and if the market cannot drive consumption, companies will tighten capital expenditure. At present, protests and riots caused by the deaths of violent laws enforcement in the United States have spread throughout the United States, and the COVID-19 threat has not weakened. Economists generally believe that the market slump will continue. It will take more than 1 year for the whole US economy to return to the level before the viruses broke out. Okay, now let's get back to European side. On last Wednesday actually, the European Commission unveiled a 750 billion euro crisis fund to support economic recovery from COVID-19 hit. The Euro Central Bank planned to provide more stimulus next month. In addition, the latest data released on last Thursday showed the first sign of recovery in EURUSD confidence index after record plunge in March and April, as well as the rebound in consumer confidence. The euro and the European stocks rose based on the positive news. It is also worth noting that the pound and the euro will be affected by the updates on the post-Brexit trade talks this week. Investors should pay attention to it. Now let's get back to more detail about last week's movement. This is the table. We can see the last week's movement. So US dollar index, we can see down by 1.51%, the euro up by 1.88%, the pound up 1.5%, Aussie dollar goes up by 2%, gold fell about 0.41%, and US crude oil rose 8.9%, and the Brent oil rose 7.74%. So the US stock market, the Dow Jones and S&P 500 rose 4% and 3.3% respectively. Okay, now let's get back to the major currencies weekly analysis, and we wish to talk about American dollar first. Now we can see USDX in this picture. USDX has experienced an oscillating, or we call consolidation, in last 2 weeks. And actually 2 months, but finished the last week. Shorts performed well at the moving average here at 60, which opened a descending trend with 5 bearish candlesticks. Currently, the price 97.7 is a very important support on daily level. Now, a breakthrough of this support will drive shorts to test the next target at 96.9. Meanwhile, the previous support at 98.7, somewhere here, from last week's analysis became an upside resistance now. Overall, 96.9 will play a very important supporting role because it is expected to be horizontal support for USD X as well as the bottom level of the medium to long-term ascending channel. So somewhere here is a very important supporting level at 96.9. Okay, let's get back to the euro dollar. Now, similarly, the euro dollar resistance at 1.1150 temporarily stopped the longs from further growth. And in fact, 1.1150 was shared in our analysis last week, and the euro is currently below this resistance. So traders should pay more attention to it. Breaking through these prices will give the longs more opportunity to test the next resistance at 1.1240. Further, it is also very important for the trade to observe the effect by 1.1150 somewhere here, and its support effect for longs, because the overall control of the euro is in hands of the long. So be careful. The opportunity to break through 1.1150 is what you have to look at for euro dollar this week. Okay, next one is pound. So the pound rebounded last week and stalled roughly at the resistance 1.2280 that we actually shared in the last analysis. However, pound still broke through this resistance after adjustment. Currently, the resistance at 1.2645 become very important. That's here. Once then it is broken through, it will open up the oscillating boundary further and launch an attack on the long at 1.3080 is here. Now, therefore, the trading opportunity for the pound will increase this week. Traders should observe the performance at the resistance level. Likewise, both supports at 1.2280 and 1.2070 will help the pound from further decline. But if the pound breaks through the resistance at 1.2645, be careful, the significance of this resistance may be reduced. Okay, now let's also talk about the gold. Gold finished its last consolidation for less than a week, just last week, and then enter into a new one. Overall, it is still active around the price 1740. That's right here, 1740. It is a very important resistance for now. If it is successfully break through 1740, the longs will have more incentive to test the next target, and the current oscillating met our previous expectation. Traders should find an appropriate price point for trading. And in addition, the candlestick arrangement for the long is very substantial and very solid. So further text on 1765, here 1765, and further 1780 become very positive with a V shape at a very high prices level here. Okay, so very positive for longs. Meanwhile, it is also important to note the support at 1693 and its protective effect on the longs. As long as this position remains strong at 1693, the longs will continue to be dominant in the market. That's what we want to share for the gold. And that's all about this week's market commentary. And we'll see you next week. Bye-bye.